exercise 4-18, which is part of the chapter 4 homework, and this one we're going to be journalizing sales transactions. So here Bridgepoint Auto sold $2,460 of merchandise on account. The terms are $415, net $45, and we all know that that means that the company will give a 4% discount if the customer pays within 15 days, but in any event, they need to pay it in 45 days. So they've also prepaid $90 of shipping costs and add it to the customer's account. So basically what we're going to do over here is we're just going to take in the accounts receivable. Now what does the customer owe us? Well, they owe us $2,460 plus the $90 in shipping. So that's the entry that we're going to make over here. And I'm going to recognize the fact that I have made some sales revenue, and the only thing that I'm going to record sales revenue is the actual merchandise that was purchased. And then because I already paid the shipping costs, I happen to have paid those in cash. They don't really tell you that, but that's how I'm going to issue that entry. Okay, so then the next journal entry is to record the cost of goods sold. Now I had to look really hard for this one. I wanted to make sure you also found it, but they said that the cost of inventory in my particular problem, your numbers might be slightly different, is that it's 55% of the sales price. So if I take the sale that I made, which was $2,460, multiply that times 55%, I'm going to get my cost of goods sold, and that is $1,353 for me. And then because I had that in inventory and I'm now releasing it from inventory because I sold it, then there's my entry for that. Okay, and then the next thing that happens is on November 7th, they said they issued a credit memo to the customer acknowledging the return of some unwanted goods. So that's fine with me. I can take those unwanted goods back. So I'm going to record that as a sales return and allowance. So that's going to go here. And because they're sending us back the goods, I'm also going to credit back. Because they are not going to pay me that amount because they're returning it, I'm going to take that into my accounts receivable. So you could see that up here I had a $2,550 account receivable. If the company returns the goods, then obviously they're not responsible to pay me that amount anymore. The next thing that happens is they want to return, take that back into the inventory, and they want to reverse that out of the cost of goods sold. And remember, we have a 55% margin over here, so that's exactly what we're going to record the cost of goods sold at. So we're going to take it back into our inventory at the 55%, which in our case is $198, and I'm going to reverse that out of cost of goods sold for $198. And finally, the company receives payment in full from the customer on November 3rd. Okay, or so excuse me, for the November 3rd invoice. Now when did they pay it? Well, they took it out on the 3rd, they paid it on the 16th. That's 13 days later. So they are technically within this grace period. So they're not going to pay me the full amount that they owe me. They're going to pay me 4% less than what they owe me. So in my case, I'm going to take in the cash, and if I took the amount that they owed me at first, $25.50, less what they returned times the 4% that they're going to get off, I get $21.06. Again, your numbers may be slightly different, but I think you'll get the idea. Okay, then I'm going to take the sales discount and allowances, which again was that amount that they owed me less what they returned me times the 4%, which is the $84. And then I am going to back out all of the accounts receivable that they owed me, which was $21.90. How did I get that? This amount less what they owed me. They take that whole thing out. So you can see that the sales discount is indicated here. They pay me the difference in cash, and now they've cleared out their accounts receivable. Hopefully that helps.